Hi traders, this is Focus Trader, and in this video we're going to have a look at ICT FVG indicator, which displays imbalances in the market. And again, it is one of the best, if not the best indicator on Tradingview that displays this ICT concept imbalances or fair value gaps. So without any further ado, let's get into it and let's have a look how this indicator works and what can you do with it. Okay, so we got this turned on. Let's go to settings and you will see that it is very simplistic. There are only the color settings and the number of displayed fair value gaps on highs and lows. So if you want the script to load faster, you could lower this. You could lower this number to, I don't know, 100. I think the better way will be to reset the settings. So let me reset settings, and you see that it's set to 100. So if I put, I don't know, 200 there and then press reset settings, it will go to 100. So 100 is default settings for this indicator, and basically it will display 100 of these fair value gaps on top and bottom. So currently we're at 1 minute time frame, so let me go to 30 minutes because this indicator works on any time frame and on any market. So we could also test it on futures on S&P 500 E-mini futures, and you see immediately that the market has strong tendency to sort of close or fill those imbalances to close those fair value gaps. You see that how they go here. There is very small imbalance there. They close it almost. You could see that some very small part the imbalance was left there, and again they grabbed it. Also grabbed some sort of liquidity here and reversed. So what fair value gap in the definition of the chart means, or what it is? It's very simple yet effective. It's basically when this candle, this is first candle, this is second candle, and this is third candle. So it's based on formation of 3 bars, and it draws this area if low of this first candle is higher than high of this third candle. So this is the gap. Again, in this case it's here, and here is the high. So this area is an area where there was imbalance. The order flow was too fast, price action was too fast. The market didn't consolidate or didn't stay there long enough to fill all orders necessary, and we are expecting in these fair value gaps to be that there will be some resting orders awaiting to be filled, to be paired, to buyers will be paired with sellers. So this is the idea behind the fair value gaps. The most important things what it shows is like I said, it's imbalance. It's information that the sellers were so strong that the buyers won't even make a reaction, and the price continued to the downside. So every time you see market sort of trending, you will see this high or big areas of imbalances, and if they are not filled in the future, if they stay there, they were really significant, and this was something about news or something like that. So you see when we are consolidating, the market goes sideways, sort of. It makes the value area here, and you see that they have the tendency to close all the gaps, all the fair value gaps, and sort of goes sideways, continues sideways. But then when the market starts moving to some direction, in this case the sellers take over the control, the sellers are in control, you see that these fair value gaps will occur. So how to utilize this in trading? For you guys who know ICT teachings, you basically surely know the way how to trade it, or at least how to use it. I mainly use it for my planning of my trading, because I trade the way that I prepare my own price levels or price zones, and then I expect markets to make some sort of reaction there. So if I give you a very quick example, there is this consolidation area, so I will draw my volume profile there, and immediately I see that you could expect that the market will react from this area, from this volume, to the downside, and the highest probability for price to react will be at the place where there is the highest volume, the most volume. So it's precisely here, and you could see where the market reacted. So I will surely make some videos, so either they are already on the channel or they will be in the future. So surely click like button and subscribe if you want to receive more videos about the way I approach market and I use these indicators. So surely click that like button and subscribe, because you will get more information on how to use these concepts. But this is the way I use it, and for me it's very interesting to connect the idea of fair value gaps with liquidity. Some people would say that this is just too many lines. This is just messy. This is not something that you will be able to use. But if you train your eye and if you think about markets a bit, you could see, and I will zoom in for you to see better. And also I will set this liquidity lines to be thicker a bit. Let's wait for a while, and they are thicker now. And you can see there is an area of fair value gaps, and suddenly and there is liquidity here, and suddenly there's nothing. There's some sort of void where nothing interesting is happening. So my idea would be that the market, if it goes here, it will have tendency to close this gap, and grab this liquidity. And what happens there? They closed everything, create some sort of liquidity here, and then immediately grabbed it and then reverse. And this happens every time. So what I use in my preparation for my trading, I make some sort of scenarios what I expect market to do. You see this this imbalance, this gap here. You see how it's almost closed. The liquidity is created there, then the liquidity is grabbed, and market reacts and grabs liquidity on the other side. And this is something that happens every time. So again, there is fair value gap here. So if the price from this consolidation will continue up, it will grab this liquidity. If it create new liquidity, it will grab this liquidity, and when they go here, they will surely need to close this gap. And if they close this gap, they surely need to grab this liquidity. And there is also liquidity at the top. So they make some sort of early reaction here, which is very small. And then they grab liquidity of this high and grab this final liquidity. And that there is very small fair value gap, which is not that important. So then they make some sort of reaction. So this is something that you could use to study the markets and to see what the market really does, how it works. And it repeats itself every time. So for example, here you could see that market go down, and here is the area where there's basically nothing interesting. There is nothing interesting here. Oh, I received very beautiful color. Better. Okay. Again, areas with fair value gaps, liquidity here and fair value gap here. So it is grabbed, closed. In the area of nothing, the market reacts. And that's happening every time. Also, the reason why they reacted here, I see the reason here in this consolidation. So let me just show you. There is a consolidation. I will make some sort of profile, volume profile, fixed volume profile. I will make this sort of area, and you could see the reaction on this volume. The highest probability area for market to react will be somewhere here, but they didn't test it. They reversed earlier. Okay. And this is the way that I'm using fair value gaps. Of course, you could change your settings according to your preferences. If you use, for example, dark mode on your trading view, if your background is black, you could surely change this to any color that you like. For example, I don't know, yellow or green. You could choose whatever you like. And also there is a opacity, which is transparency basically. So you could change the settings too for you to be more convenient with the chart. So this is the way that I'm using fair value gaps for planning my trades. And there is also one thing in which they help me to trade on small time spans, because I'm when I'm trading, I'm mainly scalper. So let me go to 1 minute chart and let me show you something that is really useful and perfect. I see perfect opportunity here. Okay, let me, oh, I will leave liquidity there. It is bad. Okay, so there is liquidity here, the area of liquidity. There are multiple lines here. Liquidity is grabbed with strong sellers push to the downside, and again sellers pushed once more. So this is some sort of wick of distribution, and then the price is starting to react, and you see it reacts with imbalance. So what you can see is the strength of buyers. So the buyers basically closed this gap, filled it with some sort of volume, they consolidated a bit, and then they made this beautiful reaction. And for people who know Focus Trader, our tools, we use Boss Trader, which is a script which is part of our strategy, and it shows you the breakout structure and then entries on high probability areas to enter. But I see discretionary entry, very beautiful discretionary entry here. So let me just show you. There is some sort of high. This is a breakout structure, and this is beautiful signal. This strong green bar. It's wide, but you could see it as a buyer's candle with imbalance. But you will learn about this imbalance after this candle closes. So this is a signal for me. This is very nice signal, and also this could be a signal, but there is a very small imbalance there. But you could see strong buyers in these two candles here. Okay, too much drawings. Okay, so here is very nice reaction of buyers to these strong sellers, and where you will target your trade. And that's the reason why I left liquidity there, because here could be a target, here will be another one, and if they go here, they will have tendency to close this fair value gaps, and then there is very nice liquidity there. So they went up here, but still there is liquidity here, so we could expect that the price will continue to the upside. And you see how close they are, so it is probable that they will grab this liquidity before they turn around and go for this. But sometimes double tops happen and things like that, but I think this time it really could go there. But there is a lot of imbalances and a lot of liquidity here, so also the movement to the downside is possible. But according to my strategy, my way to trade, oh, you see, and they will be very fast if they go there. You would see the very strong, very fast price action there. It's really nice that this happens during this video, because this is beautiful example how the market works, and I really hope that this won't end up in double top, because it won't help to build my case. But nevertheless, our entry, and you see how they jumped for this liquidity, and there is also liquidity here. So still, I think that we could go up and close this fair value gap there. This is a liquidity grab. This is strong sellers. This is strong buyers. This is strong green candle. They are not green, but you know what I mean. And you could see several entries there. And also, what we use very often in our trading is a volume here. So when we draw a zone like this, you could see that they made some sort of reaction, and this candle, which will be my entry candle, this candle closed above this volume. So what it means, that this volume started to be support. So as you can see, this candle after our entry sort of tested this value area high and continue to the upside. So that's what happens, and price starting to consolidate there. So maybe we will make some sort of pullback and gain some strength, and then go to the upside. There is also some liquidity here, so we'll see what happens, or you will see, because I think that this could be it for this video. It's everything that I wanted to show you. Of course, there are many other things. So you will see link to our free Discord in the description. So if you'd like to join us, and you see what I was talking about. This is the aggressive movement against the liquidity, for liquidity and closure of this fair value gap. So you see how this works real time. This is also the thing that I was afraid here, because the liquidity was grabbed here, and then market made some sort of retracement, and they build up new liquidity there. So this is something that what I was talking about when I was saying they will maybe need to regain some strength. There's this volume here, and then continue to the upside. But they found their strength, and they go to breakout, and they have liquidity here, which is very close. But again, they could retrace and then decide to grab it. So this is the way that I'm using fair value gaps. I do my preparations for my trading on 30-minute time frames, and I use it also in my trading. I need to see imbalance if I'm to enter the trade to the upside. I need to see that the candles has bigger size, and there is some sort of imbalance in the market that the buyers are strong enough to push price higher. Okay, so I think that's it for fair value gaps. Again, if you like this video, please click like. If you subscribe, I will be very thankful, because this will help to push this video to more traders who will utilize this kind of visualization for Tradingview, and it will help us to build up our community, because we are mainly focused on development of this trading tools. So we'll really like to see you there. And that's it for this video, and see you next time.